A dividend king dethroned? Leggett Platt, the furniture and bedding giant, has been a Wall Street darling for decades. They were a dividend king, boasting 51 consecutive years of dividend increases. But recently, the company shocked investors by slashing its dividend. The stock price plummeted. What went wrong? This iconic company is now facing serious headwinds. The housing market is in a slump. Interest rates are up. Consumers are cutting back on big-ticket items. And guess what? Furniture and bedding fall squarely into that category. This perfect storm of negative factors has put immense pressure on Leggett Platt's bottom line. Revenue is down, margins are shrinking, and investors are running for the exits. Section 2. Housing headwinds and the ripple effect. The housing market is in a funk. Mortgage rates have skyrocketed, home sales have plummeted, and new construction has slowed. What does this have to do with Leggett Platt? Everything! Leggett Platt supplies the furniture industry. They make springs, foam, and other components. Fewer home sales mean less furniture bought. This decline has hit Leggett Platt hard. Their sales have nosedived and profits evaporated. Section 3. Competitive pressure cooker. It's not just the housing market that's giving Leggett Platt a migraine. The furniture industry is cutthroat, competition is fierce, and margins are notoriously thin. And guess what? It's only getting tougher. Low-cost imports are flooding the market, putting pressure on prices. Online retailers are disrupting traditional furniture sales channels, and consumers are more price-sensitive than ever. Leggett Platt is caught in a vice, squeezed between rising costs and falling prices. To make matters worse, the company took on a lot of debt in recent years. This made sense when interest rates were near zero. But now, those interest expenses are starting to bite. The company is scrambling to reduce debt, but it's a slow and painful process. Section 4. Tail of the tape. How does Leggett Platt stack up? So, how does Leggett Platt's performance stack up against its peers? Not great, to be honest. The entire furniture industry is struggling, but Leggett Platt seems to be lagging behind. Their revenue decline has been steeper than many of its competitors. Their margins have contracted more sharply, and their stock price has taken a bigger hit. This suggests that Leggett Platt may have company-specific problems in addition to the industry-wide challenges. Section 5. Is Leggett Platt a value trap or a value play? Here's the million-dollar question. Is Leggett Platt a screaming buy at these depressed prices? Or is it a value trap waiting to ensnare unsuspecting investors? The stock is certainly cheap based on traditional valuation metrics. The price-to-earnings ratio is near all-time lows. The dividend yield, even after the cut, is still attractive. But here's the catch. Valuation is only part of the story. You have to look at the fundamentals. And right now, Leggett Platt's fundamentals are shaky, to say the least. The company is facing a perfect storm of negative factors. Revenue is declining, margins are shrinking, debt is high, and competition is fierce. Until there are clear signs of a turnaround, I'd be cautious. Section 6. Green shoots or false hope. Now, I'm not saying that Leggett Platt is doomed. There are some potential catalysts for a recovery. The company is taking steps to reduce debt and cut costs. They've announced plans to divest underperforming businesses, and they're buying back stock, which is a good sign. But the big question is, will it be enough? The housing market needs to recover. Consumer spending needs to rebound, and Leggett Platt needs to find a way to differentiate itself from the competition. These are all big ifs. Section 7. The bottom line, risk versus reward. So what's the bottom line on Leggett Platt? Is it a buy, sell, or hold? Here's my take. This is a high-risk, high-reward situation. On the one hand, the stock is cheap. If the company can turn things around, there's significant upside potential. But on the other hand, the challenges are real. If you're looking for a safe and steady investment, this isn't it. But if you're a risk taker with a long-term time horizon, Leggett & Platt might be worth a speculative bet. Just be prepared for a bumpy ride.